Thank you, operator, and thank you all for joining. I'm Limeade CEO Henry Albrecht, here to present our results for the full year ended 31 December 2020. Joining me on the call today is Limeade CFO Toby Davis. Slide 2, please note our important notice and disclaimer. Certain statements in this document constitute forward-looking statements. Slide 3 is our agenda. I plan to provide a company overview and business highlights for 2020. Toby Davis will then walk you through the full year financial results for 2020, and I will provide an update on the Limeade strategy and outlook for 2021. Slide 4. Limeade is a global employee experience software company that uses science to transform the future of work. Limeade helps every employee know their company cares while delivering people and business results that matter. The unifying purpose of Limeade is transform work into a source of positivity, energy, humanity, and purpose. I founded the company in 2006 with these goals in mind. With the COVID-19 pandemic in 2020, there's never been a more opportune time for Limeade to grow into a massive market. Slide 5. Limeade remains well positioned to capitalize on the growing employee experience market because well-being, Limeade's core and great strength, is more essential than ever. There's growing recognition of the importance of employee well-being, and the Limeade pipeline is bigger than ever. We continue to invest in growth despite the temporary impacts of COVID-19, which is validated by the significant growth in our pipeline. COVID-19 did affect the timing of closing new deals in FY20. Our platform development continues apace with 560 new activities, 25 plus new features, and partnerships or integrations with Microsoft Teams, Wellbeats, Happify, and more. Our growth strategy is kicking into gear, and as Toby will explain later, we're expecting sales momentum to return in FY21 in line with historical business seasonality. Turning to slide 6, you can see how Limeade has developed in the last 15 or so years as a leading provider of enterprise employee experience solutions designed to increase well-being, engagement, and inclusion, and lower employee turnover. The Limeade platform is used in over 100 countries with over 2.6 million users across a diverse range of industries. We've built a strong, resilient, award-winning company and culture, and have been recognized as a strong performer by leading industry analyst group Forrester, who noted this year that Limeade shines for its holistic focus on employee well-being in the large enterprise employee experience, or EX, platform category. Our software as a service, or SaaS, is used by 150 of the best companies in the world, delivering 2020 revenues of $56.6 million, 97% of which is classified as recurring revenue, and those are US dollars. You might have noted my accent being American. Slide 7 elegantly summarizes why well-being is more essential than ever through 6 independent studies by the likes of Harvard Business Review and Deloitte. We're all too aware of the impact COVID-19 has had on everyone's daily activities across the globe, including here in the U.S. and, of course, the prolonged lockdown in Melbourne. Workplace data absolutely verifies the importance of care in the workplace, with 69% of respondents in one survey lacking a strong sense of purpose at work and 40% feeling isolated. The Deloitte study highlighted that 80% of respondents identified well-being as critical to business success in 2021. Limeade anticipates that the COVID-19 crisis will have a significant and lasting positive effects on the employee experience software industry. Turning to slide 8, our core product offering serves chief human resources officers, customer experience officers, and human resources professionals within global enterprise customers. The Limeade solution reaches 100% of our customers' workforces, whether they are on-site or distributed. There are 3 main goals of our innovative platform in our customers' hands. 1, infusing well-being into work. 2, increasing employee engagement. And 3, lowering staff turnover. The Limeade Institute and others have shared strong scientific evidence that higher rates of employee engagement and well-being lead to a reduction in staff turnover and increases in productivity. Turning to slide 9. Limeade decisively and effectively met the challenges of the COVID-19 pandemic during 2020 by seamlessly transitioning our employees or Limeates to a completely remote operations and workforce. We launched 100+ COVID activities in our software to support well-being, inclusion, engagement, communications, critical culture connectors in the new world of remote work. From a business perspective, despite the significant disruption of COVID-19 globally, Limeade exceeded guidance for revenue, EBITDA, and net loss after tax guidance in FY20. We upgraded our EBITDA and net loss guidance twice during the year. The company also generated $3.8 million in positive operating cash flows for the year. We were awarded a Top 12 Workplace Culture Award. We updated and refreshed the Limeade platform. In addition, our monthly active users, or MAU, grew 20% over the prior corresponding period. Limeade made several key appointments during the year to strengthen our senior management structure, including the appointment of a Chief Technology Officer to replace Eric Rivas, who retired from his role. We also added a VP of Product. On slide 10, we provided a snapshot of our innovation highlights for the year. 560 new activities, COVID-19 support, and various activities for well-being, engagement, and inclusion, and 25 features and upgrades made to the platform, including authentication improvements, foreign language support, new communication capabilities, all things increasingly essential during COVID-19. We created new partnerships and connections in 2020, allowing infusing Limeade well-being activity content into Microsoft Teams, along with new connections into Wellbeats and Happify experiences. Turning to slide 11, this provides an example of an important customer testimonial from Ryan, global tax services software and technology firm. Working closely with the Ryan HR team, Ryan Thrive, powered by Limeade, has materialized major benefits for Ryan in connecting with its global workforce. Notably, global employee registration increased to 87%, up from 13% under its prior program, with a fourfold increase in global monthly active users as well. This is a useful real-world example of the benefits Limeade can bring to enterprise customers and their employees. On slide 12, Limeade improved communications and empowered a hard-to-reach manufacturing workforce for Wabash, a diversified industrial manufacturing leading producer of semi-trailers, truck bodies, and liquid transportation systems in North America. Across several locations, up to 80% of their workforce is deskless. The Wabash at Work launch, powered by Limeade, saw measurable improvements in a matter of weeks, with 61% of employees actively using the Limeade software, and also improvements in communication lines and employee recognition. Finally, on slide 13, although this customer remains confidential for contractual reasons, I wanted to share some of their results with Limeade. The results highlight the strong benefits conferred by the Limeade product offering to large global enterprises. This will be available post this conference, and you can read all the details. Slide 14 provides a summary of the employee experience market and Limeade. The EX market is a large and growing market, with our own report and analysis indicating our target market is growing at 20% per annum, and in 2020 was worth $21.8 billion. More broadly, some estimates are up to $300 billion. As 2020 has shown us, unexpected or uncertain macro events have provided the perfect storm of challenges to companies and opportunity tailwinds to Limeade and our well-being and employee experience technology. This has led to a flurry of activity in the EX market, with numerous acquisitions and many entrants and consolidation efforts. It's a highly fragmented global market. For Limeade, being a pioneer of well-being, engagement, and employee experience with a unique lens matters a lot. We're well-positioned and focused to capitalize on this $21.8 billion market opportunity for our technology within the broader $300 billion EX market. I would now like to turn the call over to Limeade Chief Financial Officer, Toby Davis, who will go over the full year 2020 financial results in more detail. Toby?
Thank you, Henry. Moving to slide 16, this provides a snapshot of our financial highlights for the year. These include revenues of $56.6 million, which was up 19% versus the prior corresponding period. Our gross margins grew over 1% to almost 78% versus 76.6% in the PCP. We have driven increases in operational efficiencies and the time to launch new customers. Additionally, both our average direct well-being customers grew 2% versus the PCP to $651,000, and our overall average CARR per customer was up 11% versus the PCP to $367,000. Our total customer count ended the year at 150, which includes 102 direct customers and 48 indirect customers. Limeade recorded 18 new enterprise customer acquisitions for the year, which was down from 30 customer acquisitions in the PCP, reflecting the impact of COVID-19 on contract signings during the year. Net revenue retention, or NRR, was 87%, down 11% from PCP, related to indirect customer churn effects, which I will discuss in an upcoming slide. Moving to slide 17, this provides a financial summary over the last 5 financial periods. As investors will recall, Limeade customers typically sign 3-year contracts and pay annual subscription fees in advance. Importantly, the average length of a customer relationship with Limeade is over 7 years and shows the renewal that we consistently maintain. New customer launch times are reasonably modest, with an average time to implement approximately 90 days. Hence, there is a timing difference between CARR and revenue recognition. The company recorded revenue growth of 19.3% in fiscal year 20 to $56.6 million. Subscription revenue accounted for 97.1% of revenue in fiscal year 20, up from 95.8% in fiscal year 19. Recurring subscription revenue from existing customers will continue into fiscal year 21, with the top 20 Limeade customers on average having 19 months remaining on their contracts as of December 31st, 2020. Overall, our revenue growth over the long term has been solid and consistent with a 5-year CAGR of 24%. The company also delivered positive EBITDA of $1.2 million and significantly improved the profitability in fiscal 20 against the backdrop of global uncertainty. Our closing fiscal 20 CARR was down 3.7 to $55 million, which I will discuss in further detail on the following slide. Again, as a reminder, investors should note that CARR is a leading indicator of future revenue for Limeade. Our CARR performance in fiscal 20 again was $55 million, compared to $57.1 million in fiscal 19. Over the last 5 years, the annual growth rate in CARR has been 15%, highlighting the growth opportunities of the company's core well-being business. The direct channel customer base remains strong, with $5.6 million in new customer CARR and $1.6 million in upsell and expansion CARR generated in 2020. The economic impact of COVID-19 slowed new customer growth, but Limeade maintained its direct book of business with fiscal year 20 direct channel growth of 1% on a CARR basis versus the PCP. Total gross churn was 16%, or $9.2 million in fiscal year 20. Gross churn of Limeade direct customers was 13% in fiscal 20 versus 14%, and was within line of company expectations, pre-COVID expectations. Subscription pricing per user was also maintained and within expectations during the year. Given the macro environment experienced in 2020, we are very pleased with the results and the resilience and value proposition of the business model, specifically in the direct channel. The main driver of the overall decline in total NRR was attributed to an increase in the indirect or partner churn, resulting in partner NRR of 66% for fiscal 20 versus 102% in the PCP. The company has a key reseller partner who focuses on the mid-market and experienced significant churn during the year, driving our overall customer count lower. In fiscal year 20, the average CARR size of indirect churn customers was less than $100,000 per customer. Moving to pipeline. Our pipeline is bigger than ever, and even though fiscal 20 closing CARR was impacted by COVID-19, our new customer contracts during the year, Limeade predicts that the COVID-19 crisis will significantly have lasting and positive effects on the employee experience software industry. We're seeing major increases in the level of marketing activity during fiscal 20 with a 474% increase in qualified leads generated by Limeade webinars compared to the PCP. We also have 2.5 times more registrations for our upcoming Limeade Engage conference on March 9th. These increases correspond with the momentum we see in the EX market caused by a greater number of companies understanding the upside of investing in their people. The company is seeing early indications of this macroeconomic shift with total pipeline of $226 million as at 31 December 2020, representing an increase of 20% over the PCP. During fiscal 20, Limeade has seen significant growth in the qualifying or marketing pipeline to $166 million, up 43% on the PCP. Currently, marketing penetration of the addressable global enterprise market by Limeade, as measured by contracted enterprise customers, is less than 1% of the estimated $21.8 billion global employee experience software market, allowing for plenty of headroom for growth. Moving to cash flows. Our operating cash flow for fiscal 20 ended the year with $3.8 million, or up 36% from fiscal 19. Our cash balance at 31 December 2020 ended at $31.5 million with no debt. As you can see by the cash flow bridge presented on the left-hand slide, the company exhibited strong cash management during COVID-19 and collectively the 2020 fiscal year, with our closing cash position basically equal to the start of fiscal 19. Our strong balance sheet means the company is greatly capitalized to fund ongoing growth investments. Our cash receipts were $60 million in fiscal 20, representing an increase of 10% on the PCP, with steady CAGR growth of 18%. Moving to the income statement, this provides a full year result. We have already discussed the growth in revenues for the year and our gross margin improvement over 1% over the PCP, reflecting higher value contracts and continued improvement in operational efficiencies. I'll focus on the growth in our operating expenses and material improvement in EBITDA for the year. For operating expenses, there was an 11% increase compared to the PCP, driven largely from an increase in the average headcount of 236 Limeades in fiscal 19 to 271 Limeades in fiscal 20. The increased staffing costs were offset by reduced sales and marketing spend on events and travel as we shifted to webinars and remote meetings due to COVID-19. This was progressively flagged to investors on our quarterly calls throughout the year. The net results delivered positive EBITDA of $1.2 million compared to an EBITDA loss of $2.1 million in fiscal 19. Moving to the cash flow statement, our operating cash flows for 2020 were $3.1 million compared to an increase of $2.4 million compared to fiscal 19 due to improvements in EBITDA as well as continued improvements in working capital driven by increasing annual payments from customers. Moving to our expense slide, as investors will appreciate, while Limeade did continue to invest in people to execute on our strategic plan and expand market opportunities, the uncertainty around the COVID-19 pandemic and effects on corporate budgets did result in us taking decisive action to slow hiring versus the PCP. Overall, we still increased headcount, ending fiscal 20 with 264 Limeades compared to 258. Moving to our fiscal 21 guidance, Limeade will continue to invest in growth initiatives during fiscal 21. Our financial guidance is for revenue of $50 to $53 million, an EBITDA loss of $5 to $8 million, and a net loss after tax between $7 to $10 million for the year. As we addressed to our investors throughout the year, COVID-19 slowed new customer growth in 2020, which is resulting in a lower revenue range when coupled with forecasts of 2021 churn. Our growth in new 2021 customer acquisitions will continue to be seasonal and skewed to the second half and will contribute to revenue growth in 2022. We will continue to invest in sales and marketing to capture growth in the booming demand for employee experience software. Lastly, as a pioneer in the employee experience market, we will continue to innovate and focus our investments in product and our market-leading platform. I'll now turn the call back to Henry.
Thanks, Toby. I will now provide an update on our strategy and outlook. On slide 26, I want to provide investors with the very best science we're providing by the Limeade Institute. Our own data shows that employees who perceive that their companies care about them are 2 times more likely to be engaged at work, 4 times less likely to suffer from stress and burnout, 7 times more likely to feel included at work, 9 times more likely to intend to stay at their company for 3 or more years, and finally 10 times more likely to recommend their company as a great place to work. Slide 27 provides a high-level summary of what other organizations are saying about well-being, and it's important to group corporate objectives and overall corporate strategy. Slide 28 summarizes the Limeade offering. Our key position is to reach anyone, anywhere, with low-cost, mobile-first technology combining well-being with inclusion, engagement, and real-time communications capability in a simple, modern mobile user interface to meet the needs of today's changing and remote workforce with the flexibility to serve different populations and cultures. Slide 29 provides a view both into how care and culture can show up in a common mobile experience. Slide 30. Our organic growth is predicated on upsell and expansion within our strong existing customer base. The next pillar of our organic growth is new North American and European customers, with that strong pipeline Toby mentioned a moment ago. Third pillar is enhanced product capabilities. Limeade, as a pioneer, is built on innovation and continues to innovate, not just with important UX and UI improvements and features and great content in the domains we're expertise in, but in true enterprise-class global software. And lastly, we are always looking for creative, strategic, selective, inorganic growth through mergers and acquisitions. So in summary, I feel the business is well positioned and the pipeline is ready for Limeade to seize the moment in FY21. This concludes our formal presentation. I will now hand over to the operator for the question and answer session.
Thank you. If you wish to ask a question, please press star 1 on your telephone and wait for your name to be announced. If you wish to cancel your request, please press star 2. If you are on a speakerphone, please pick up the handset to ask your question. Your first question comes from Tim Lawson from Macquarie. Please go ahead.
Hi, gentlemen. Thanks for taking my question. Just specifically on the indirect distribution channel, obviously there's been elevated churn in that distribution. Can you just talk where you think that the outlook for that is? I mean, how big is it in terms of the contribution? Where do you see that relationship going?
Yeah, hi Tim. Good to hear from you. That will represent about 10% of the business in fiscal 21. And I would suggest that we continue to keep the focus on our direct channel business. So I would still maintain probably that 10-ish%. We'll always be opportunistic as deals come in on the partner channel. So I would just materially think kind of model in around 10%.
Okay, thank you.
Thank you. Your next question comes from Seth Hoskin from Canaccord Genuity. Please go ahead.
Hey Toby, hey Henry, how's it going guys? Thanks for taking the question. Just sort of following on that one in terms of the guidance range of revenue for 50 to 53. So direct CARR's sort of sitting at that 49 level. Is the bottom of the range really just reflecting continued uncertainty and churn in that indirect channel? Is that kind of what's being baked into that bottom end of the range?
Seth, it's a good question. Thanks, Henry Albrecht here. Some of that could be indirect channel. I also think it's important just to remind our investor base, including yourself, about just the length of the sales cycle. So COVID-19 did have, as we've discussed, some delaying effects in our pipeline. As we shared, the pipeline appears to be very strong at this point in time. That pipeline, we believe, will convert into contracted annual recurring revenue, or CARR, this year. But the revenue from that CARR typically will kick in probably more significantly in FY22 than in FY21. So what you're seeing mostly is the delayed effect of COVID in early and throughout 2020. Toby, I don't know if you would add anything to that.
Yeah, I think just coupled with, consistent, moderate historical churn forecast, it's kind of that, that delay in rev rec due to the CARR amounts that came in 2020. And I think, some of the deals we saw that closed late in 2020, those won't launch until into part of 2021. So you're not seeing a full year of revenue from those contracts closed in Q4.
So no, that's really helpful. And then just on the commentary you made in terms of expecting sales momentum to return in the second half, is that just, can you just provide some color on what you're sort of seeing to support that statement and what you're seeing on the ground?
Yeah, I think with the long sales cycle, it's what we have to do is really look at the whole funnel in our pipeline. And some of the statistics we shared at the top end of the funnel in our marketing, in our webinar attendance, in the meetings we're booking with large enterprises, large global enterprises, we're very excited about it. We feel like the pipeline is very strong at the top of the funnel, and we're also seeing it stronger at the bottom end, certainly that we saw for most of 2020. I think also the market was looking in 2020, there was a somewhat of a chilling effect on purchase decisions in HR and benefits departments. We have customers who are letting 10, 20, 30,000 people go and furloughing more. And when that happens, many of these budgets just get kind of frozen reactively, instantly, and just, hey, we're not doing anything new except maybe some Band-Aids. We're gonna spend $50,000 on this little app for COVID response, or we're gonna spend $100,000 on some mindfulness training, but they're not really rethinking the whole strategy. What we're seeing now is that companies are they've had a year to think about this. They've had a year to soak in how impactful this pandemic has been on things like addiction, social isolation, how do you manage a team remotely and get feedback, and just overall stress and burnout. And those are the things that Limeade has built our name on, pioneered the market on in well-being. And so we're starting to see companies now say, we need to take this much more seriously in the future than we have before. And our competitors often have more of a check the box, like let's make sure everyone visits the doctor once a year and gets their flu shot, but more of a basic approach, whereas Limeade takes a true culturally immersive approach that I think will stand us in great stead as the economy recovers in 2021.
Thanks, Henry. And then just finally, could you just provide some commentary on sort of the M&A environment for employee experience? It seems sort of, outside looking in, it seems to be picking up to start this calendar year. You've seen a big acquisition from Workday and obviously Microsoft Viva. Just could you talk about just the industry generally and how it's picked up in 2021?
Yeah, I mean, first of all, it's very exciting for us. Anytime you see companies like Workday make a $700 million acquisition of Peakon in the employee experience space, when you see the introduction of Microsoft Viva with a true platform play in employee experience, doing what Microsoft does better than anyone, which is be a true platform company, we're very excited. A rising tide rises all ships. And secondly, or B, I guess, since I started with A, being a platform company means that you need partners in your ecosystem. And so I think the breadth of Microsoft combined with companies who aspire to integrate seamlessly in that experience, who have deep domain experience with benefits buyers in the well-being market, to us, we're excited about the potential opportunities from both of those. I would also just say in general, there's been some exciting activities with other employee experience companies, and they're looking at companies like Qualtrics and Docebo and others who have very, very strong valuations in the 20 to 40 times revenue range, and we're excited about our return to growth.
Perfect. Thanks, Henry. Now it definitely seems like it's done to move up that S-curve. Thanks, guys. Appreciate the time.
Thank you. Once again, if you wish to ask a question, please press star 1 on your telephone and wait for your name to be announced. There are no further questions at this time. I'll now hand back for closing remarks.
Thank you, operator. Thank you all for joining the call today. Before we close today's investor webinar, I'd like to, on behalf of the board, management, and all Limeade employees, thank Toby Davis for his 4 years of service to the company as Chief Financial Officer. This will be Toby's last earnings call with investors. It's a bittersweet day for all of us. Toby's achievements are numerous, not least of which preparing the company for our IPO on the ASX and the successful listing in late 2019. I'm sure most of you have had the opportunity to speak with or have met with Toby over the last 12 months or so since our listing. His last day with the company is on 12 March 2021, and we wish him every success with his future activities and look forward to updating investors when a suitable replacement for Toby has been recruited to the role. So thanks, Toby. Thank you, everyone on the call today. Thanks to all Limeates, Limeade customers, and investors. Goodbye from Limeade. Stay strong. Onward.